Welcome back to Fast Market. I'm Alex Coffey alongside Kevin Hinks. Now time for our Cash Tag segment. We're going to be showcasing the earnings powerhouse in many ways, Lululemon. Joining us here in studio is TD Ameritrade Network contributor Jenny Horn, and from LikeFolio.com, the co-founder Andy Swan is with us. And so this is certainly another one of those fan favorites, both from a trading standpoint, Jenny, and also from really just an apparel standpoint. And really those two go together. It's been such a great product. And of course, we've seen the investor sentiment follow alongside that. But this has been very, very interesting to watch how strong it's been. However, recent weakness, as you pointed out in the break.
Yes, they are. I mean, they are down 2.5% today, which we're sort of seeing with this broader market weakness. But as of lately, we're sort of seeing them slide, which I actually think could be a good thing heading into the second quarter report. But like you mentioned, they are sort of this mega retailer, and at leisure, they're not the first to do so, but they are definitely considered to be one of maybe the best. Now, for this second quarter, analysts are expecting revenue of about $1.3 billion on earnings that are expected to grow about 60% year over year. Now, this follows first quarter when they reported actually revenue that grew almost 90% year over year. But there is this concern that, of course, they faced relatively easy comps from a year ago when a lot of their stores were closed. Now they're also dealing with some of these supply chain woes as well as material shortages, which we've heard from many other retailers in this space weighing on the company's report. So that is something to keep in mind. But still, I have to say that, I think I feel a personal attachment to this company's earnings, as I think Lululemon makes some of the best athletic apparel out there. And over the last 2 years, their company-operated store revenue has grown 3% higher, and their e-commerce revenue actually is higher than their 2019 levels, showing that they've rebounded from the pandemic and then some, which is pretty remarkable for a retailer. Another thing is more people are, of course, visiting the stores since they are reopened and they are able to do so. And we're also seeing this sort of rising consumer interest in this brand again. Plus, warmer weather typically means more people are indulging in outdoor fitness activities, and this bodes well for Lulu, Nike, Under Armour, all of these different athletic retailers, because really it just shows that people enjoy typically working out more in the summertime, which to me makes perfect sense, especially when you live in a place that is very seasonal like Chicago. So that does help them. And historically, they do report stronger earnings in the summer months, which I thought was interesting and important to keep in mind. Now, one thing is, of course, all eyes will be on this company's costs. Other retailers have mentioned some of these shortages, supply chain issues, all of these things weighing on the company, and inventory levels are also a huge concern. But Lululemon, as of last quarter, reported about $733 million in inventory on hand, which is actually up about 17% year over year. So just showing that actually, despite some of these shortages and woes that are sort of facing the broader market, they are doing supposedly all right. Now, we'll get more clarity on that in this report, of course, but as of the first quarter, the picture still looks very positive for this company. And I have to say that on social media, this is a name that is loved. People love to tweet about Lululemon. People also really love to trade Lululemon, and especially given its recent dip, it actually, I think, bodes positively for traders. So that brings me to our first tweet of the day, which says, Lululemon has proven a standout brand during the pandemic, especially as more people exercise regularly or choose to work from home in shorts. Alternative data shows that web traffic to Lululemon's online store is up 150% year over year, raising expectations of the company's earnings call tomorrow. So really, I saw such positive tweets across the board, really just very high expectations into this report. But what I actually like about this name is the fact that the stock doesn't necessarily reflect these maybe inflated expectations. But our next tweet sort of talks about a lot of these work from home plays across the board outside of just Lululemon, which says Lululemon, RH, Nike, and AutoNation. Many software and IPO stocks have performed well recently, but some quality stocks are trading below their 50-day simple moving average. Retail names like RH and Lululemon have their earnings reports scheduled for this week and may bounce. The auto stocks have hit the brakes, which was we thought was a bad dad joke, but I loved it. And I do have to say that this is a name that, of course, has benefited from the pandemic. We saw this sort of rise in athleisure, which is something that has proven it's here to stay. So, Andy, what I'm curious is how your data reflects this, because I would expect their e-commerce sales to have slowed as they've sort of been this e-commerce darling in retail. But people are visiting the stores more again, at least I hope. So I would expect that to sort of offset maybe the digital sales. So I'm curious to see what your data has to say.
Yeah, everything in our data really offsets itself, and leads us to a really neutral conclusion. We have to get that kind of out of the way first. So on the positive side, like you said, Jenny, people love this brand. They love the products. Very high quality. Happiness remains really, really high. For an athleisure maker, 74% positive, which is up 2 points year over year. They love the expansion of the Align line. It's got pockets in it now. They got some biker shorts that are a huge hit with users on social media and elsewhere. On the negative side, we see a little bit of a dip in terms of their digital presence compared to last year. Now, last year was, of course, an outlier event, so a lot of pull forward demand there. A lot of people were just stuck at home. We're going to wear their Lulus as much as they could and needed new pairs. So that's down year over year, but we see it, up since 2019. So it's kind of a wash. This company's doing well long term, and it just feels like may have just lost a little bit of the positive momentum that it had last year, and I think the stock reflects that. The other thing I would say from a competitive standpoint, we do see Athleta, which is owned by Gap, a brand owned by Gap, benefited pretty well from its Olympic partnership. Had Allison Felix and Simone Biles involved, and that really did resonate with the core consumer base, and I think gave Athleta a leg up on Lululemon here as we went into the fall. But overall, I think this is just a really good company that makes really good stuff, and the question is, how positive can their outlook be? With so many unknowns. And from a LikeFolio data perspective, they have plenty to talk about from the positive side, but I do think that there is just that slowdown in momentum that could be a little tough to overcome on an earnings call.
Andy, who do you think, in your opinion or your data, who do you think their main competitor is? You just mentioned Athleta, probably a lower price point maker of very similar clothes. It's not really Nike, although Nike's probably what they're aiming for, and in many ways they're beating Nike in terms of margins, in terms of growing, in terms of all the direct to consumer. They're doing actually better pace-wise than Nike is. Is it Under Armour? Is it Nike? Is it Athleta? Is it Dick's Sporting Goods? Right, that Lululemon doesn't sell clothes in. Is that their competition? Where do you think the main competition is for Lululemon?
Well, all those are kind of competitors. Even Amazon is a competitor because they do sell some private label athleisure stuff that's pretty popular. But in terms of, it's all kind of like you're saying. It's difficult to identify for a reason because it's kind of a smattering of competitors where you've got,
Sure.
Gap has a good brand in Athleta. American Eagle has some good stuff. Nike has good stuff. Amazon has good stuff. But the dominant player, the name that you think of in athleisure, still is Lululemon. And that remains the case because they continue to make products that their customers really, really love. So, it's kind of one of those. Gap or Athleta's doing the best right now, but there's still minor players, that are all, kind of nipping at Lulu, but nobody's taking out any big bite.
And Andy, in full disclosure, I think I own maybe too many pairs of these Align leggings that you talk about, and I understand their popularity. They're sort of unlike any other leggings I've ever owned, and I guess that's why I justify continuing to pay Lulu's very high prices, which I think is arguably one of its weakest points, is it's not for everyone because it is not cheap. But I have a question to sort of, to discount myself, as I'm always so positive on Lulu. But one thing that concerns me in a big way is their Mirror acquisition, because we've really yet to see that come to fruition at all. I've never really even heard of anyone using it, and I see it at their stores. But I can't really imagine that its sales have been very strong. So is this acquisition turning out to be sort of a flop from your data?
Yeah, it is. You nailed it. Your eyes did not lie when you're looking at the consumer popularity of this. It's just not there. Down 68% in terms of purchase intent mentions for this Mirror product year over year, even lower than 2019 levels. I think it's safe to say that Peloton absolutely won that race and dominated that race. And Mirror, I think, is going to be something that Lulu looks to avoid in its conference call, discussing it's moving its way into, kind of low-level bullet point status, I think, at this point.
Andy, I got a question to you about how Lulu continues to execute and grow into the future. And so we've talked about this countless times and its ability to really have created this complete powerhouse and industry leader from the ground up in a grassroots fashion. But as they expand into menswear and they try to do other things, and Nike becomes, maybe the target that they're shooting for in terms of size and scale, at what point does Lululemon consider, if ever, maybe doing something that Nike's done all along, which is kind of, tag a superstar, pay them a bunch of money and promote something? Because to me, at least amongst me and my friends, I can say that, Lulu apparel is worn on the golf course as if it's golf clothes and it's not its primary use. Seems like a major missed opportunity that they don't go into either the tennis world or the golf world, pick one of the superstars, throw a bunch of money at them and have them promote their products and maybe come out with this brand new line. And that would really open the door to a whole new consumer base potentially. Why haven't they done something like this? And will they ever, as kind of off-brand as it seems to be for a grassroots company like Lulu?
Yeah, I think you nailed it. I think it's really just it's momentum. It's the way that this company, started was really grassroots. They considered the superstars to be the person in the front of the yoga class teaching the yoga class, and that's who they went after, an influencer in locality by locality, yoga studio by yoga studio, and we're very successful at that. And throwing, millions of dollars at a superstar athlete or well-known person wasn't in their company DNA and may still not be. But I think when you're talking about something like you're talking about golf, tennis, getting a little bit more of the active part of athleisure and not necessarily yoga, which lends itself perfectly to grassroots. But tennis, golf, those kind of things, they really don't. They are star driven. And I think eventually Lululemon will have to make that choice. And, they're probably trying to figure out right now how to do it while defending what their brand stands for and that grassroots type of origin story that they have. So, if I'll just throw my name, if I were on the board or, helping them, I would try to find someone that's an upstart in one of these sports, like really young, hasn't proven themselves, a grassroots kind of story of some up-and-comer, that maybe could make a run in one tournament or two tournaments, that they really put their brand behind. I think that could resonate really well, maybe better than just going after someone top 10 and throwing a lot of money at them.
Good stuff. Andy Swan, you also mentioned that you are a little bit neutral maybe right now for Lululemon, but it's hard to find negatives in the story. You talked about maybe the flop with Mir, but that was an example of them trying to expand and build on their brand, which I think as an entrepreneur, you do like to see that in the kind of continuing to put the pedal to the floor. But going forward, do you see sell-offs in this company as opportunities to become a shareholder?
Oh yeah. This is a great company, and they really have great earnings calls. I encourage people to listen because this company's pretty transparent with what's going on and does a really good job of keeping their investors in the know. And so this is one where you listen with a keen ear.
Good stuff. Andy Swan, thanks as always for joining us, co-founder of LikeFolio.com.